everyone, and welcome to our webinar, A Storm is Coming. I'm Annie Rowland. I'm the Managing Partner of Capco UK, and today I'll be hosting our discussion alongside our panelists, who I shall introduce very shortly. Now, for those of you who are new to Capco, firstly, welcome. Capco is a management and technology consultancy organisation, specifically looking at the financial services domain. At this stage, we have about 8,000 people globally, but very much an execution focus across the globe around business consulting, innovation and design, data, engineering, and technology. But now today, Team Capco are here with a superb panel to go through what I think is an interesting topic, which is an overview of the Financial Services and Markets Bill legislation, which was put forward to Parliament in July 20th this year and sets out a proposed statutory framework for managing systemic risks posed by third parties. And it's that legislation and its impact which we will be talking about today. Now, I mentioned I have a fantastic panel with me, so let me introduce you to the gang. So to start us off, we have Pankaj Kane, who is the Chief Engineer for Admiral Group. And Pankaj has over 25 years of technology experience and brings with him significant experience in building and engineering culture and capability in large organizations. So thank you, Pankaj. We also have Ian Burgess, who leads UK Finance's operational and regulatory policy work on cybersecurity and on third-party risk management specifically, both in the UK and internationally. Also joining us is Wayne Freeman. Now, Wayne is the CTO of Metal, who is responsible for overseeing their cutting-edge technology stack. Wayne previously served as VP of Engineering at World Remit and Director of Software Engineering at Capital One. And finally, and by no means least, we have Dave Cecil. Now, Dave is Capco UK's cloud lead, and he has over 20 years of professional services experience in the IT engineering, literally from engineering to architecture, delivering cloud-based solutions, specifically within financial services. So hopefully everyone agrees, a fantastic panel with me today. And I will not be going easy on this panel because I have questions lined up for them, but I'm also very much opening up a Q&A for everyone who's participating in the webinar today. So please do feel free to use the Q&A function within Zoom. I'll absolutely keep an eye on that within the webinar, and I'll definitely make time, at least at the end, to cover some of those questions. So I think that's all my intros done for myself and the team, and I think we're ready to kick off. So Dave from Team Capco, I'm delighted to hand over to you first of all to talk just a bit more actually firstly about the proposed legislation. So a bit of an overview would be really useful, and then actually how can this impact our cloud strategy? So over to you, Dave.
Yeah, of course. Thanks, Annie, and thank you to my fellow panelists and all of you on the audience here watching us today from what can only be described as somewhat described as a ironically cloudy day here in London. So we just wanted to give you just a brief overview of the bill and how that affects our financial services industry. A couple of slides and then we will drop into the panel discussion, which I'm really looking forward to. So firstly then, why are we here? So our industry is changing, our financial services industry is changing. What I would describe as moving from an economy of scale, which we've been going through in the last few years, to what is now known as what's described as economy of speed. What I think that means for cloud is key. Cloud has the ability for us to be flexible, to adapt innovatively, quickly, and move with the market. And we are seeing that with our clients and across industry today. The adoption of cloud is definitely growing. But of course, that with that growth comes regulatory concern, and it hasn't been unnoticed, this growth by our regulators. And it's become a bit of a focus point, and that is why we're here today to talk about this bill. a bill that, as Annie has just described, called the Financial Services and Markets Bill, or FSM Bill, which it might be referred to today. It was put to Parliament back in July this year, and a paper has been released by the Bank of England alongside the PRA and the FCA, and also the Treasury, which describes this bill in some detail and actually talks about some of the practical steps, and that's something we're going to be talking about a bit further today. Now, the bill itself does focus on what is termed critical third parties. And while that could be, and actually is, any other critical third party, could be any third party that a bank deals with, the very fact is that the main third party, which is noted a number of times through any of the papers and information about this, is a cloud service provider. And is often used in examples, and who can blame them, given what we've just talked about, the big meteoric rise of cloud for our industry right now. But nonetheless, the point is that the concentration risk that this brings when banks are using cloud providers, and we will get into, I'm sure we'll get into some more detail about concentration risk as we go. But the concentration risk of these firms moving to cloud and potentially moving to the same cloud provider is incredibly high. In fact, there is a stat of 65% of the UK firms are using just one cloud provider. So legislation concentration risk, a critical third party might introduce, but there are other parameters as well, which we'll get into. But as the regulator is concerned, using the same provider or using a critical services, as it's termed in the bill, from the same provider, could cause issues around concentration. And also the other thing to point out here is that there's a term critical services. Again, this is to be defined, and again, I am absolutely certain the panel will get into this in some detail later. But the other important point to note is that the UK regulators have taken a global approach to this. They understand that cloud being inherently a global service, therefore this needs to be something which is worked alongside other regulators from other regions across the world as well. Could we just move to the next slide, please? So just briefly then, just wanted to go through what does this mean for your cloud strategy? How does this act actually affect your cloud strategy? And the point here actually is that it depends. So how you may react to this bill and the measures that are put forward does really depend upon the cloud strategy you've chosen. So for example, if you're in a hybrid cloud strategy, the chance of your concentration risk is increased because inherently you have chosen a single cloud provider and your on-premise infrastructure, therefore concentration risk has increased for you as an individual firm. But with multi and polycloud, that things are different. But the point here I wanted to just get across on this slide is that when you're thinking about your cloud strategy, concentration risk, and therefore the things that are in this act and legislation that is being proposed, is just one area to think about. So for another area, as an example, is portability. So your portability, your ability to port things from one place to another is another lever you may look at, and also resiliency as well. So what we're trying to do today is we'll get into a bit more detail about this. We'll answer some of these questions and some more. One thing I will say is that there is a great paper out there that my colleagues Cornelia and Jess have written, which is called Clouded with a Chance of Concentration Risk, which is where this has come from, this particular information. So do feel free to go find that. It's available on all good social media platforms. But now with this context in mind, let's get into the debate. Annie, back to you.
Great, thank you very much, Dave. And I think that really does put us on a bit more of a nice level playing field, although I'm starting to understand why you have called this webinar A Storm is Coming. When we're talking about critical services, we're talking about concentration risk, we're talking about the impact to our cloud strategy. So I think it's best that we crack into that. And Ian from UK Finance, if you're okay, put you on the spot, and I'll start with you, but I would find it really useful to understand what you think the implications are of this legislation, and also what do you think were the main kind of motivations or drivers behind it?
Yeah, thanks, Annie, and obviously thanks very much for having me here. So I think I'll probably talk about the motivations first, and I'll come on to some of the implications. I think motivations, there's a couple of things I'll touch on. First is that operational resilience has been a key pillar of regulatory focus for a few years now. And also the emergence, as Dave's already articulated, of certain third parties which are growing in significance for the sector. So to summarize, I'd say that the motivation is to manage the system, for the regulators, is to manage the systemic risks posed by certain technology providers, including CSPs, to the regulators' objectives of market stability, market integrity, and customer protection. Now, we know that many firms already rely on a small number of third-party providers to deliver their services, and some of these third parties clearly fall outside the regulatory perimeter. So that clearly limits the regulator's ability then to monitor and manage any risks in terms of disruptions or failures that might occur. Now, if we go back, as I already mentioned, the Operational Resilience Policy statement, which was published in 2021, under that policy, firms relying on third parties to support the delivery of their important business services, that's a really key phrase in all of this, important business services, play a role in monitoring and managing risks presented by those third parties. However, I think what the discussion paper really focuses in on is that no single firm itself can adequately monitor or manage the systemic risk that certain third parties play to the regulatory objectives, as I've already articulated. It's just not possible for a firm doesn't have, no single firm has that information to hand. So I think that really goes to the motivations which we see from the regulators, we see from the bill and in the discussion paper. In terms of the actual implications to firms, I suppose to financial services firms, the implications are certainly less so than if you're a third party, which may be brought into a regulatory perimeter, into something which you've not experienced before. So, but I'll try and touch on this. First of all, the implications are establishing a framework for designating certain third parties as being critical. That has to occur. Clearly, there are many third parties out there, but there are only a small number that will be designated as being critical. That'll be done by HMT. And I think, as Dave's already said, the designation will focus on the materiality of services provided, where concentration exists and where the services can be easily substitutable, as opposed to actually the provider itself. So really focusing on our services. Minimum resilience standards for CTPs, going back to operational resilience. So having those minimum resilience standards in respect of material services they provide to firms. And these will align with the Operational Resilience Policy Statement from 2021 and focus on the ability to adapt, respond to, recover from and learn from operational disruption. Thirdly, I think resilience testing of material services that CTPs provide to firms, and the provision of information by CTPs to the regulators to assess the resilience. I think that's really going to be key. So not just that, you know, we know that they're providing these services to these material services, but they're being tested to certain standards, and then those test results are then being shared to firms. I think that's going to be a really important one for financial services firms, is receiving that information so they can build that into their operational resilience frameworks. And then lastly is the fact that there will clearly be new statutory powers for the regulators to exercise over CTPs. So, you know, that obviously comes with certain certain potential implications to those firms in terms of, you know, skilled persons reviews, potentially dawn raids, that sort of thing. But in terms of financial services firms, you know, they may be asked to enhance their due diligence or their monitoring or business continuity and exit plans for those material services that they receive or plan to receive, dependent on the results of the tests that the regulators perform on the CTP. So, you know, I think it's a really interesting paper. It's one which has been, you know, the breadcrumb trail has been out there for probably a couple of years now, and certainly one which, you know, our members are really interested in and looking forward to responding to. So thank you, Annie.
Right. Okay, thank you, Ian. I know you covered quite a good bit there around the motivations and the implications for financial services firms. But if we went, I think, just a level deeper and started talking about, okay, but what's the impact of provisions to specific business services that are in scope? And actually, what even would we consider an important business service in this context? So Pankaj, if it's okay, can I put that question to you?
Yeah, thank you very much, Annie. Firstly, good afternoon, everyone, and I'm really excited to be here and share some of my thoughts on quite an interesting topic, as we've said before. I think in terms of the question of, what is an important business service or how far do the provisions go, I think I'm just going to build on the points that Ian's made and Dave kicked off as well, that increasingly the regulator is very focused on operational resiliency and it being as important as the financial stability of the organizations as well. And as the breadcrumbs analogy has been said, there have been a number of papers over the last few years that are kind of starting to make sure that financial services organizations, as well as the CSPs, start to put some rigor in the demonstration and testing the operational resiliency. And so the scope for me is quite material. It covers the definition, for my understanding of the definition of important business services, any service, the non-availability of which could cause intolerable harm to the customer or could address, challenge the stability of our financial system. So in case of insurance, for example, where I am currently, it could be anything to do with pricing, rating, being able to make a claim, being able to, make a complaint. In case of banking, it could be anything to do with accessing funds or accounts, ATMs, making a payment, receiving the payment. And there are a list of, services that cover capital markets and so on, retail, commercial banking, so on and so forth. But for me, it almost highlights that these are kind of the core services that we offer to our, our customers from a financial services point of view. So it really goes to the heart of what we are here to do. And I think because of this, the terms like, resiliency, availability, portability, concentration risk, it's no longer just an IT thing. I think this is for the senior business leaders have to start to think about that, understand the implications and start to plan towards that. Because irrespective of what the CSP is accountable for, the responsibility for the service to the customer still stays with the financial services. So we cannot, give up on that, and we have to be very focused on it.
Okay, thank you, Pankaj. And I think, as you said, one of the most important points you've just made there is actually the services that are impacted are directly customer facing, and therefore, this storm that we're talking about is very, very real. And I think therefore on that point, we've talked about the motivations behind it, we've talked about the implications behind it, and actually some of the services, which we now know are very much customer facing. But what actually should we be starting to think about now and in the medium term? So Dave, not to put you on the spot from a Capco perspective, but what are some of the things that we should all be thinking about and putting into our plans?
Yeah, thanks, Annie. And I totally agree with your point there, Pankaj. It's not just an IT thing. I think that's really, really key. It involves a lot of different functions and around the business, and it's important to call that out. But just to your question, Annie, I think so. Firstly, the first thing to think about is that there are responses and there are questions that the regulators are asking, and the responses are due at the end of this year. I think it's the 23rd of December. So the first thing to think about is that they're available directly on the joint paper, which is you can find on the Bank of England website. And to Ian's point, this is not just about financial services providers. It's not just about our sector. It's about the cloud providers themselves. So it's important that both those parties are looking at those questions and thinking about what the implications mean. The legislation is in draft still, so it's time to learn. They can still learn more. But assuming it passes, and I think that is pretty much highly expected that it will do, then there's some things that we should look at, and Ian's touched on a few of these as well just now. But so the first thing I would look at is assessment of your cloud strategy based upon this legislation. So and the themes that are called out that Ian's mentioned already. One theme is materiality, and to be clear again, materiality means which services are material, i.e. which are key to the scope of the legislation. And the definition has still to be defined, exactly what that means, right? And what those services actually are, as Pankaj just said. But again, to Ian's point, we should look at other legislation, other things that, other papers that are written. Operational resilience, for example, is a good one to understand what may well be considered in scope, and certainly that is referenced in the paper. So the first thing I would do is I would perform an assessment of the business architecture, because to the point of the business services that we're talking about here, the functionality which is required of the business to perform whatever the business needs to perform is key. So being able to map that against services that are then provided for you by a critical third party is important, and then you can look at it from various dimensions. Alongside that as well, not just from a business point of view, but also from a technology enabler point of view, for the technology components that are used as part of that, and could, under certain scenarios, also be included within this framework, is important to look at. And then documenting the failure scenarios of those business services and technology components will help you gauge what the probability of impact and risk for your business. Under concentration risk theme, again, I've mentioned this earlier in my introduction, but it does change depending on your cloud strategy. So again, with a hybrid strategy, your potential chance of concentration risk within your firm, and that's important, within your firm is higher. With a multi or poly cloud, because you have more options at your disposal, therefore that there is less chance of concentration risk. It doesn't mean that it doesn't exist, it's just there's less chance of it. And other things like thinking about industry consensus, thinking about things that the industry are using, which happen also to be cloud-based, is an important area to think about, I think, within concentration risk. And then another thing that's mentioned is around potential impact. I think a really important one in here is aggregation risk. So once you've understood the service and functionality against your business architecture, when you've mapped those against the critical services, there will be cases where on their own a service may not be deemed as critical, but when you aggregate the risk and join services together to complete a business process or business function, that might also mean that then comes in scope, and that's a very difficult one to get to, but that's going to be quite key, I think, to understand. Another wonderful word, which I'm so glad we've got to this point in the presentation, no one else has managed to say yet, which is all over the paper, which is substitutability. And that means how quickly a service could be substituted for another. So practically what that means is, back to portability again, are you able to bring your service online with another provider or on premise? How quickly can you do that? And then to follow that on, survivability is another term which is used, which is if you aren't able to do that for whatever reason, if there is no ability to do that, and there wouldn't be any ability to do that, how long are you able to survive without that service being available? And I think the final thing I would say here as well, it's important then to understand, with all of that in mind, your change management processes, your testing processes, and to Ian's point earlier, resiliency processes, testing processes around that to ensure your maturity is to a high level.
Okay. I mean, Dave, I'm not going to lie to you. It sounds like a lot of actions and planning is needed, and therefore, I suppose I got distracted with a couple of things you said, which is one, actually, this is still in draft as a legislation. It has not been approved yet, although expected to be. And second of all, you threw out a date of December 23rd. So I think for everyone's sanity for planning, we need to qualify that. And I think, Ian, you're probably the man that will be able to confirm the date. So what actually are the expected implementation timelines for the regulation? And honestly, having heard everything that Dave's just said, do you honestly think that the financial industry and institutions are going to actually be ready to deliver in line with those timelines?
Yeah, Well, obviously, the first thing I should say, Annie, is that I'm not a regulator, so I'm not, and I'm sure the regulators wouldn't give you timelines if you asked them either.
We won't hold you to it. We won't.
No, exactly. The one timeline we're absolutely certain of, Dave's already mentioned it, is the 23rd of December. So that is the response date for responding to the discussion paper. I think it's really important at this stage to say it is a discussion paper, and in the sort of the way the regulators approach this, the discussion paper will precede a consultation paper, which will precede policy statement, the final piece of regulation, essentially. So what we expect, and I should also mention, obviously, the unique aspect of this is the aspect of the FSM bill, and that this is going through Parliament. With most regulatory new regulations, that we don't have that. The unique thing here is obviously bringing firms in from outside the regulatory perimeter. So to try to answer your question, we expect the consultation paper to come out next year. We would expect sometime sort of probably early to mid 2023, but I could easily be left with egg on my face if the regulators decide they want to push it to late 23. As mentioned, because this is a discussion paper, what I'd say is, firms, anyone on this call, whether you're in the financial services sector, whether you're a cloud provider, another third party, do respond to the discussion paper. It's very open-ended. Chapter 10 includes 21 questions. So 21 questions the regulators are specifically asking readers to respond on. So do so. We at UK Finance are coordinating an industry response to it, but there's no reason why firms can't respond individually and present those views. So consultation in 2023, and then a policy statement probably no earlier than 2024. In terms of whether the financial services sector is ready, as already alluded to, there isn't actually going to be that, the direct implications on financial services firms aren't there. The operational resilience policy statement, that was something which firms had to really push hard to meet those deadlines. Some of them were clearly further ahead than others. So they've done a lot of hard work already on that. And there was a conjoining supervisory statement on third-party risk and outsourcing as well. I think what's really going to be interesting is things where there's going to be an interaction between the third parties and regulators, and then onto firms potentially. So as I've already mentioned, sharing of test results, the designation of the third parties. How are the regulators going to understand how those third parties are going to be designated? They're going to need to receive data from financial services firms to understand that. And then going back to the point we've already made, it's about services rather than just the providers themselves. So really delving into that, because the regulators aren't going to be regulating the third parties themselves. They're going to be regulating the services that are being provided. So that's a key distinction there. They're not going out, they're not going to be regulating AWS, and frankly, that would be a massive job, I'm sure. So they wouldn't want to take that on.
Yeah. So
I think that's a really interesting aspect to this. So yes, I think financial services firms are as ready as they can be, noting that there's nothing final here. Once the consultation paper is out, I'm sure that there might be things that firms want to tweak and change. But I would suggest it's more the tweak and change rather than wholesale changes that they'd be conducting. Obviously, for a third party, for a cloud provider, this is something which there may be more radical changes. But again, they'll have seen with the introduction of the EU's DORA, Digital Operational Resilience Act legislation, that the UK isn't necessarily going to be unique in this space. And so hopefully they've prepared for this themselves. So maybe not the direct, unequivocal response that you wanted there, but hopefully, as good as I can provide at this stage.
Oh, absolutely, no, it's really good guidelines. And I think, as you mentioned, it's like, well, what actually will be the changes, positively or negatively, and does there have to be any? And I often think with every good legislation or policy comes a review of a good operating model, and actually are changes needed to that? Maybe they're not. And I suppose, Wayne, if possible, I'd love to bring you in here and just remind everyone on the webinar that Wayne is CTO of Metal, and I'm sure you've seen plenty of operating models in your time, Wayne. So do you think with this legislation that it will affect operating models?
Good afternoon all, and thank you for inviting me along. So I mean, to actually reinforce Ian's point, this will obviously affect all regulated FSIs, but the bigger impact will be on those firms who receive the CTP classification. And I think the advent of cloud computing has enabled firms, ones like Metal actually, to build and operate by leveraging the infrastructure and services of not just the cloud service providers, the CSPs, but also a kind of rapidly growing number of organizations who provide specialized regulated financial services, which are also hosted in the cloud, which creates some additional complexity. It's been a huge enabler for the industry and certainly for organizations like Metal. And we don't think the legislation will threaten that approach. It will certainly add additional rigor, which will have to change the way that we engage with the CSPs and other CTPs. But I think the model itself will evolve. I don't think it's a wholesale change for us. And actually, I agree with what Dave said earlier. I think there will be a significant impact on the way that we think about architecting our systems. That might be a bigger change.
Because Wayne, it can't be, a vendor services provider ourselves without thinking about procurement quite a lot as a function in all of this. So from this standpoint, do you think the legislation could potentially change procurement activities?
Definitely. I think it will change both the new onboarding and the kind of in-life procurement activities that we have to do, with a focus on, a likely focus anyway, on exit planning, resilience scenario testing. I think today it's been a mostly desk-based exercise, and I think the regulator will want to see something a bit more practical. And I think there'll be more focus on due diligence on the CTP's own third parties and subcontractors' operational resilience. And I think, from my perspective, from the Metal perspective at least, we were born in the cloud, and we've had to think about this for quite some time. And I think, a strong, really rigorous partnerships approach is going to be really important. It certainly has been to this point.
But Wayne, I suppose on that point a little bit more, I think it sounds like you're saying, realistically anyway, organizations such as Metal were already mitigating third-party risk, or CSPs. So it'd be good to, I suppose, understand that a little bit more, like what has been maybe the secret sauce or some of the success stories that you've been part of.
So I think Metal has engaged a fairly large number of partners, actually, both CSPs and other partners which provide very specific services. We have thought very carefully about how we use each of them. We have tried to scope very carefully what we use for what things, just to ensure we don't have intrusion from partners, I guess, is one way of looking at it, but also it means we can control their operational performance very well and actually replace them if we absolutely had to. I think taking our cloud approach is evolving across the whole of the industry, certainly inside the NatWest Group and inside Metal. We actually host our platforms inside GCP and AWS at this point. And we continue to think about what will need to evolve in the future.
Okay, thanks, Wayne. And actually, you've brought up a great point around the multi-cloud strategy or single cloud strategy, which I was going to move on to shortly. And just to say to everyone on the webinar, I can see the Q&A numbers starting to roll in, so please do continue to post them there, and I will start to get into them quite shortly. But Pankaj, if I can go to you for a second, because kind of Wayne was talking about, NatWest, AWS, GCP. I'm wondering, with this legislation, is there an opportunity maybe where the CSPs are going to say, actually, do you know what, these requirements could or would be met by a single strategic cloud provider? So what would be your, I suppose, views on that, or would there be resiliency concerns if you went down that path?
Yeah, I think a single CSP strategy, immediately it kind of jumps into a concentration risk type question, all eggs in one basket, so on and so forth. But for me, really, it's more about your second part of the question, which is resiliency and portability. So in theory, you could say that a single cloud strategy, CSP strategy, might meet your resiliency. But in which case, what you're saying is that you can demonstrate for all failure scenarios, including stressed exit scenarios, you have a solution which is very portable. With a click of a few buttons, you can move it from an existing CSP, which may have a global sustained failure potentially, to another one running, and then you will be able to make sure that your customer service is not impacted. I think it is very unlikely. In theory, it is possible. In reality, to be able to get to that. In fact, portability is a big question for us anyway, generally, even across multiple cloud CSP providers. So I think a more realistic approach to managing your not just concentration risk, but resiliency has to be a multiple CSP approach rather than a single CSP, in my opinion.
Okay, and I suppose on that, Wayne, just come back to you for a second, because you alluded a bit to the NatWest strategy and I suppose metals. So it sounds like you're not going down the single provider, you're thinking about cloud concentration risks. Would that be fair, or are there future plans where you're thinking about maybe a different strategy, bearing in mind this legislation?
Yeah, and actually I'm probably not best placed to talk from a NatWest group point of view.
Yeah.
And the NatWest group uses a number of different cloud on-premise capabilities. I guess for a bit of context, from a metal point of view, at least, we were born in the cloud. We were 2017 and remain cloud native. We have no proprietary data centers. Main environments we have are in AWS, with the kind of multiple availability zone resilience as you'd expect, but we have data and analytics and backups in GCP. And as I've said, all of our suppliers, almost all of our suppliers, with very few exceptions, they're all cloud native kind of SaaSful companies, which gives us a kind of certain fluency, I guess, with the cloud and some benefits. We, scaling up and down in terms of our needs can happen very easily. Data's backed up in cloud storage in multiple clouds. So hopefully nothing short of a global takedown of AWS and GCP, simultaneously would prevent near real-time RPO. So, I guess it's safe to say we're quite happy with our general direction, but we're not ignorant of the risks. And there's a lot, we do a lot to kind of analyze and mitigate and manage. I think the partnerships point I brought up earlier is really critical. I think we need to keep thinking about all of the ways in which we engage, how much rigor we employ, to make sure that we are choosing the right suppliers for the right services. We have credible and detailed exit plans, and I think that becomes the norm from here on in for everyone. And I think that those things particularly, it will just be about more rigor.
Yeah. I think that's spot on. And actually a theme that I was thinking about is you can't help but think about planning, but then you think about controls and governance, frankly, that needs to be considered. And I suppose maybe there's maybe a question, Dave, for you, and then Pankaj, I might come to you on governance. But Dave, with your tech hat on, are there any IT controls that could be put in place potentially at a technology level that should be considered?
Yeah, absolutely. In fact, the tech hat is my favorite hat, by the way.
Good to know.
So there certainly are, and it's actually interesting hearing Wayne's comments earlier as well about being born and growing up in the cloud is Metal's kind of history, and that's quite interesting because obviously a lot of these controls can be put in place when you're doing that, right? And I think that's a great example of an organization that's been able to do that. But to the question then, Annie, you brought up, I think there are some common patterns, but some of them will do vary depending on what your cloud strategy is. But there are certainly some things that are common nonetheless. So, for example, but the decisions that you make will affect other strategies as well. So it's important to think about this in the whole rather than just in this particular case. So, for example, things like DevOps, which it would be affected. Things like your cyber resiliency process and strategy, even down to your business strategy, actually, which is we've sort of touched on a little bit already. So and clearly the other thing as well, to Pankaj's point earlier, it just depends on what actually gets classed as a business critical service and what doesn't. But for me, the key thing to do first of all would be to introduce controls in your continuous delivery pipeline. So you can apply whatever business logic you like within your pipeline, but you could, for example, introduce things like workload management techniques around that. So basically deciding where to you could from a portability point of view, where you're able to deploy your workloads and also being able to adapt where you deploy those workloads. So you might be able to do that on a dynamic basis. So for example, if there is a particular business critical service that has been identified under this framework that you need to be able to port and move that workload to another provider or on premise, using some of the automatic things you get by being in the cloud, the alerting and the dynamic nature of the cloud will allow you to do that and introduce those kind of factors. We touched on it as well, but I think in resiliency testing and cyber testing, that's really, really key. It's mentioned in the legislation, it's on the paper, it's all over the paper. So, being able to use as part of your pipeline, producing reports to show that you've tested in a certain way automatically as part of your deployment process will be really important. And you can then bring those reports to the regulator or whoever needs to see them. And then I think, sorry, Annie.
No, go ahead.
And I think other controls as well. So anything that you can control from within the control plane that you get as being deployed into the cloud with whatever provider you like. So taking advantage of the scalability you get for free, things like capacity limits and looking at the automated alerts you get from that would be really key to introduce some IT controls.
Yeah, thanks, Dave. And I think I probably can get away with saying that Dave, as a tech consultant, loves a good control. And obviously putting it together and pitching it. But Pankaj, I wonder, is there a challenge to what Dave is saying? Is all of this necessary governance or is it unnecessary?
Oh, it is extremely necessary because from my point of view, this is the internal governance structures that we have put in place, especially from a technology and risk and controls, I think invariably focuses on numbers from a workload and concentration point of view. This is where most organizations that I've been in is you start off with a cloud first strategy of some sort. You have some data center exits, and that very quickly moves into management of concentration risk by numbers. I think where governance has to lift its game is to start to think about from an IBS point of view, important business service. So if you start to map out your business service flow end to end, and you realize that suddenly you're making lots of hops across multiple different CSPs or critical third parties potentially, you're introducing more and more failure points from your resiliency point of view. So do you want to start to think about how do I, if I have 5-6 different important business services, do I want to compartmentalize them differently? Do I want to make sure that they are quite segregated from the way they are dependent on these third parties? And you manage concentration from a slightly different lens than a traditional numbers game, because I don't think that gives you the resiliency that we are looking to achieve. And therefore, the internal governance has to now start to think about how am I managing that? How am I making technology choices? How am I thinking about portability from the point of view of if I have to exit, what's my vendor lock-in? And these are all important questions that have to be thought up front, and they have to be baked into the flow, exactly as Dave said. I'm an engineer and I'm constantly thinking about the flow and velocity. So the last thing I want is more governance bodies and more decision-making things to slow things down. But you have to put these guardrails and controls right up front, baked into your pipeline, because they are very critical for good service to your customers.
Well, I have to say, right, I'm watching the live Q&A and there's a bit of a challenge coming in that I would like to open to anyone on the panel, but very much related to what Dave and Pankaj has just been talking about, which is, and the question is, there is cost, so time and money, associated with ensuring and exercising portability and resiliency. And this will have to be weighed against the business value of services. And hopefully this regulation will account for this. So does this panel think regulation like this would impact IT budgets, so i.e. increase them, and actually probably have an impact on agility and time to market? It's a great question. I'll before I pick someone, I'll see, does anyone want to volunteer?
I can start. I mean, I think so. It is a great question. Thank you for posting that question. And it's interesting because I think this concentration risk exists anyway. So the very fact that the regulators are bringing in this regulation just means that, you know, that we have to react to it, but we should be reacting to it in the first place. So I would hope that, you know, IT budgets are already set up to think about this. But nonetheless, of course, when you're, you know, whenever a regulation is involved, there's a lot of process and time and money that needs to be put into responding, making sure you're doing the right thing from an organization point of view. What I would not want to happen, you know, again, as a technologist and someone who is passionate about building services in the cloud, wouldn't want this regulation to slow that innovation down, because I think there's been a lot that's happened because as a direct result of organizations moving to the cloud. It wouldn't be something that I think we'd want to slow down, but you know, there's inevitability that you need to do this right, otherwise you will.
Could I just maybe ask Wayne, I hope you don't mind me putting you on the spot, but I think of Metal and the story around Metal, all about amazing agility, time to market, really great story there for yourself and the team. So would you be concerned that something like this would impact your way of working, agility and time to market plans?
Thanks for the kind words, first of all. And I don't think it will, actually, but it will obviously create additional cost somehow, because there will be necessary rigor. I mean, we have a talented partnerships team who spend a lot of time thinking about how we engage with certain third parties. They're going to have to do a lot more work. We have a cloud strategy, and we're moving forward with that. And I believe that will align to what will happen with this legislation. So I don't think it will have a huge impact, but I think, unfortunately, for other organizations who are not as fortunate to have started only a few years ago, who have more, you know, heritage technology and more complexity in what they need to do, this could present a significant overhead, because if multi-cloud for critical services is mandated, it's a fairly significant undertaking.
Yeah.
Yeah.
I think that makes sense, and a great point. The Q&A channel is going absolutely crazy, and actually what I would like to do, just to keep our panel on their toes, is I'm hopefully going to be able to work technical magic here and open it to a live question from one of the guests on the webinar. So hopefully this is going to work. We shall see.
Can you hear me, Annie?
I can indeed. Yeah, go for it. Thank you.
I am not Stephen Stantial. I borrowed his Zoom link to log in, so my bad. So I'm masquerading. It's Sam Cayley from Deutsche Bank. So a short comment and a question, I guess. So I find a lot of the discussion around this topic sort of worrying, and the reason I find it worrying is it sort of, part of the implication and part of the sort of the way that it's framed is around the kind of portability and substitutability is just, you know, must be good and therefore, you know, must be implemented. And, you know, the issue I find with that is that a lot of the reason for using the cloud, certainly why we want to use the cloud, is absolutely operational resilience and better than we've got currently, but actually access to the IP of the cloud providers. And there is a very inherent trade-off in substitutability and use of IP of the providers. And, you know, if we are forced down a kind of multi-cloud route, that inhibits, restricts, or even removes our ability to take advantage of AI, ML, BigQuery, Spanner, you know, highly resilient architectures. And I guess what I would say is, you know, if you think about some of the large providers, and I realize this is a different industry, you think about Spotify, you think about Amazon, Google, Microsoft themselves running their own massive critical kind of, you know, retail or Office 365 or Google search engine. They're clearly highly sensitive kind of critical services. And how many cloud providers do all of those run on? They run on one, right? So I'm interested in the panel's view of that trade-off between IP and substitutability.
I'm very happy to start.
Yeah, Wayne, then we'll head on to Pankaj. Go for it, Wayne.
It's a great question, and it's something we've been wrestling. I guess we've all been wrestling with for some time. If you want to leverage the best that a cloud provider has to offer, it makes it very difficult for you because you become entrenched, you become very reliant on services. It's very difficult to actually then create a capability where you can have all of your services operating in multiple clouds without not taking advantage of those services. So it's a huge trade-off, and so it's a resilience trade-off that I guess we're all wrestling with all the time, and I'm not entirely sure, that I'm comfortable with where we're at.
Thanks, Wayne. Pankaj?
Yeah, to be honest, I was just going to say what Wayne said, which is this is a problem that we have been grappling with for quite some time because it's speed, agility versus resiliency and cost, clearly. But I do think that it's not a one size fits all. You have to think about your use cases, and you have to think about, going back to the definition of important business services. If there are certain things, especially utilities and so on and so forth, I think you can have a native capability, you can leverage that. But if you're running a mission critical application that's processing 30% of UK's money flows, you have to think very hard about how do you keep that resiliency. And if a single CSP, however, it might be multi-region setup, it might be even global setup, but if there is sustained, failure, then you have to be able to deliver services to your customer because it's systemically important to the UK economy. So I think you have to, it's not an easy answer, and I'm hopeful that in the next few years, the technologies will solve this problem because this is a burning platform for a lot of us. But until then, you have to apply some thinking. It's not that easy, unfortunately.
And I think, to be honest, Sam, that was a great question and theme. And actually, it's like a webinar in its own right, isn't it? There's so much that can be discussed and debated around that. But thank you so much for that question. And I think Pankaj, you've mentioned it a couple of times now, and Wayne, you just mentioned it there as well, which is we have talked a little bit about the services impact, but we've also said that actually this can impact us, or can it, as a banking customer. So I suppose that's the question I have, and it's not my question, it's come in from the Q&A live chat here, which is for this panel, how are these changes likely to affect us as banking customers? I'm not sure, anyone want to jump in? I mean, Ian, I could potentially put you on the spot to kick us off if you have a view.
So we're talking about sort of individuals here rather than corporations as customers.
Correct, yeah.
I personally don't see that, there's going to be a huge impact on customers. I think largely that there's a lot that's been going on behind the scenes for the banks for a few years now, and I would suggest as customers you don't really notice the work that's going on, beyond just service improvements and general improvements and innovations which happen over time. So I think customers should be fine with this. It's interesting that the FCA is part of this. So, there is clearly a focus on customer protection and, customer harm with this regulation in ensuring that, customers are considered rather than just the banks themselves. So, and sorry, and just one last thing I would say is just on any of these points, and whether it's the cost implication or the potential reduction in resiliency, that's why there's a discussion paper out there. People should absolutely send in these views to the regulators. It's great airing them in a webinar like this. I think it's really important. But the regulators aren't listening to this and taking notes. They will wait for their formal responses to come in. So I do urge people to make those comments.
I think, Ian, that's probably a perfect last question to ask each of the panel, if that's okay, which is, you've kind of said, well, what's next? Well, one thing is to actually start airing the views and feeding back into the regulators. So I suppose for each of you and your organization or your guidance to this webinar community, what are you going to focus on next in response to this legislation? So Wayne, if it's okay, I'll kick off with you.
Absolutely. Well, Ian will be pleased to hear that one thing I'm definitely going to do is be working with my colleagues in the broader NatWest group, and we will be responding to the paper. I think that's obviously very important. I think in metal, cloud strategy, it has been a focus, but it becomes even more important right now. Planning our transition, whether it's multi-cloud or multi-region in a particular cloud, coupled with understanding the criticality of our services, is kind of job number one. That's what we're doing next.
Great, thanks, Wayne. Pankaj?
So I've got an easy get out of jail card, having just joined Admiral, recently. I think I do have to spend some time understanding where we are from a definition of important business services, but also a response to this particular paper. But from a day job perspective, the thing I'm really passionate about is embedding those guardrails and controls into our development flow, so that we are focusing on resiliency right from upfront rather than it coming in quite late. And I think that's something that I'll just crack on and figure out how do we automate as much as possible and codify those controls. So that's definitely going to be my day job and focus area.
Brilliant. Thank you. And Ian, I know you've given us your tips around, well, listen, guys, get your views back in. Is there anything else you would say would be on the to-do list?
Yeah, so I guess what will happen beyond December into 2023, I mentioned this already, things like minimum resilience standards. I think what's going to be really interesting is if the sector wants to coalesce around actual industry positions on this. So industry standards, which we can work with, develop, perhaps in conjunction with the regulators, so that these things aren't going to be new, and certainly for firms, it's going to be a lot easier to embed them within their frameworks. Certainly, it's something we've been looking at from an assurance perspective when firms are onboard third parties. So I'd say for me, it's looking at how the industry can potentially develop and build things together, which can aid the whole sector, and it will also hopefully aid the C2Ps as well.
Brilliant. Thank you, Ian. And I have to say, as I get close to just 1:30 UK time, I think we do probably have to call it a day. I think I have to say a massive thank you to the panel here with me today, to everyone who's posted questions. Sam, who came on live with a question there as well, and for anything that we have missed, via myself, Dave, who you've heard on the webinar, or Pete, who you see on the screen there, we'll make sure that we come back on any questions that haven't been answered, or actually if you have anything new as well, please do feed it in and we will be delighted to come back to you on that. And if you're keen and want to hear this all over again, you will be able to listen to it again. We'll share the webinar and the link so you can replay it if needs be. But I know it's a complicated topic. I think it's probably fair to say a storm in some form or another is coming, but I'm amazed at actually all the different type of themes we got to get through today as a team. So thank you very much. Thanks to the panel, and we look forward to seeing you all again soon. Bye-bye.